Hello everyone, in today's video I want to talk about the current situation in the stock market, the economy, inflation, and the possible recession coming up as well. Also the Russia situation and what I'm going to do to prepare for everything going on. First of all, we already saw the inflation report this week. We saw how the all-time index rose 0.6% month over month and 7.5% year over year, when we know analysts were expecting 7.2% year over year. It grew just as much as it did on December 2021, which is the highest it has been, meaning that it is not slowing down as many believe or decreasing. Something that is very interesting is that we can see that all items less food and energy also grew 0.6% again, or 6% year over year. We saw how used cars and trucks went up 1.5% month over month and 40.5% year over year. But something kind of preoccupying is that other components of the CPI index that previously did not have big increase are suddenly beginning to grow, such as apparel started going up on December, medical care went up a lot on January, and most importantly, transportation services. This might mean that inflation might be out of control at the moment, which might cause the Fed to be more aggressive with it in the coming weeks or next month, affecting more companies and the economy in the short term. Right after that, we saw how the 10-year Treasury yield got to 2%, and since the report, the S&P 500 is down over 3%. But just how aggressive can the Fed afford to get? Over the Axios, Matt Phillips and Daniel Irwin rightly noted that persistence of high inflation rises the risk of a self-reinforcing cycle that might take more aggressive actions to unwind, which would risk slowing the economy. As I said many times, these are the consequences of the actions taken during the pandemic to save the economy and the market at the moment. Obviously, printing $24 trillion in 12 months was not going to be good for inflation. But when the epidemic started, lockdown started affecting businesses. As customers stayed home, people lost their jobs and many businesses closed. Companies also started cutting investments as well. But instead of seeing the economy sinking for a longer period of time, the economy recovered faster than expected because of a vast infusion of government aid and emergency intervention by the Fed, by slashing interest rates and pumping more money into the economy. As the economy opened and recovered faster than expected as well, businesses could not hire fast enough to fill job opening or buy enough supplies to meet the demand, causing a supply chain issue as the ports could not handle this amount of traffic. Unexpected traffic, causing costs to rise while companies pass those higher costs to us customers through the products, and here we are with a 7.5% inflation year over year. And I believe supply chain issues are not going to get fixed that fast as many believe. There has been a lot of consumerism in the past year, creating a huge demand, which creates a huge traffic in ports higher than expected, and that is not something that gets fixed from one day to another. It is a chain of things that have been happening, which we are now suffering the consequences of. I do not believe inflation will slow down that fast, as companies are still struggling to keep up with the demand for goods and services. We are in a recovering job market and more. We saw how gasoline prices have gone up 10% since January's report, and rent is most likely going to accelerate as well. It will certainly take time, which is why many believe that inflation will start to moderate during the second half of 2022. Now, will we see a recession this year? This would cause high unemployment, the economy will struggle, companies will make fewer sales, and the country's overall economy output declines. First of all, I don't want to come here and say that I believe that for sure we are going to see a recession this year and that we should all sell everything and just wait. But it is definitely something that we have to take into consideration and have in mind, learn about it and prepare for it in case it happens. The danger is that with price gains far above its 2% target, the Fed will be pressured into overdoing it, pushing the economy into a downturn by rapidly raising borrowing costs for consumers and companies and cratering financial markets that have grown used to its ultra expansionary monetary policy. And the Fed being more aggressive than expected will affect companies, jobs, and stocks more than expected. The worry is that because the Fed is now playing catch up on inflation, it may make a mistake and pull back support for the economy too quickly, causing a recession. Obviously, this affects many companies and the stock market itself. As we know, speculation dies off with high levels of inflation. Companies will have to devalue their revenue and sales projections, and even more companies with high PE, with high growth expectations. This is why we can already see many of those companies selling off. As said before, we saw how the 10-year Treasury yield went up over 2%. But investors were worried even more about the yield on shorter terms US bonds, like the 2-year note, for example, which has been rising even more dramatically, and it is now above 1.5%, gaining about 110% so far in 2022. This matters because investors tend to demand higher payouts for longer dated bonds, since it's less risky. The thing is that if shorter dated bonds surpass the 10-year, for example, it could create an inverted curve, as known as negative yield curve, which is a sign that investors expect a deterioration in near-term economic conditions and aggressive intervention from the Fed. Then we have the Russia current situation. Biden already said that Putin or Russia could attack Ukraine any day. Diplomatic sources said that the US president had told allied leaders in a call that the Russian leader had taken a decision to go ahead, but the national security advisor said, "We have not seen anything come to us that says a final decision has been taken. If they are going to make a move, it is going to be in the coming days, and it is very, very important to follow the news, as if they do make a move, the market is likely to go down, and then the oil industry could continue to spike even more. If they don't, then the market will continue its trend and even go up, depending on all of the other issues that I just mentioned: inflation, interest rates, job reports, recession, and more." Now, as I said at the beginning, I'm not saying that we will for sure see a recession. Obviously, the inflation report was not good at all, and that is no secret. We are seeing how many companies are not giving guidance as well for this year, and might be because they are also very uncertain for what is really going to happen, as a recession could really affect every single company. And also with turnaround guidance, I believe we have to be very careful with this market right now. I have been adding to my positions little by little, but also have been setting cash on side just to prepare myself in case we do see a recession, or in case the market drops continues. Remember, it is impossible to know what will happen in the coming days, months, or years. Economic data looks at the past and analyzes the past, but stocks looks at the future, which might be why many spec stocks and higher risk investments have been dropping that much in the past months, because of what is expected in the coming months for them. I do have to say that I have never seen inflation this high in my life. I'm 25 years old, so the highest it ever got was about 5.6% back in 2008, 2009, and I was 13 years old. But to be honest, I don't remember much about it, meaning that I'm no expert at the moment. Everything I know about this is because of my family, the news, because I like to read about this and learn about this, but have never really experienced it. This is just my knowledge and no recommendation at all. As I said, I have been investing and adding to my positions little by little in the last 2 months, as the market has been basically crashing and have been presenting nice investing opportunities. Still, I have been saving money as well, saving cash on the side on my bank account, just to have something prepared in case the market continues crashing, and the cash that I have available to invest in Robinhood and One Finance and for a year ends. Then I'm okay, as I will have more saved up. Also, in case we really see a recession, but to be honest, I will just wait until March Fed's meeting to see their take on all this and what their plans are, as in my opinion, there is a lot of frustration in the market right now, a lot of uncertainty, and that brings a lot of volatility to the market, which could be good in the long term if we make the right decisions. Again, I did not stop investing. I have been adding slowly to my positions, but have been increasing my cash position as well. I'll leave you here a video on my M1 Finance portfolio update, and here for you to subscribe. Thank you, and see you next time.